let me record this.
Recording in
Actually, at 12 o'clock, guys, I have to leave. I have an appointment and a program. I have to leave at 12 o'clock. So I will be able to stay like half an hour right now. So that's why, I wanted to move it ahead. And that's why we started much earlier right now, because I must leave. So sorry about that, but I must leave. So gold, fresh analysis. Let me find the chart where I actually have some markups. Okay. And let's delete a few things. You know what? Let's just delete everything. Let's delete these. So what I expect actually on gold, we got this fair value gap here in the market, super clean fair value gap. Now here's this large rapid candle that made a large imbalance. And for the fair value gap, I'm using this wick right there and this wick to mark up the fair value gap. And what I expect is for the market to fill in this gap. So it's just a matter of time until I expect a reversal into this area. So overall, I would say I have a bearish bias on gold until this fair value gap would be filled. So this is something I'm looking at. Let's just extend this. So until this fair value gap is filled, I'm definitely bearish on gold. Also, if you look at previous day's daily cycle, actually, this is the Asia range. Here we had the London high, low of the day, and the market came back, New York, fib level. So even yesterday, we had actually a bearish daily cycle pattern. And today I expect, not only today, but the entire week, I expect the market to drop into this fair value gap and maybe NFP, because this Friday, actually, I believe we have NFP. Just let me check one moment so I can make sure. Maybe it's next week. Okay, then I just misunderstood something. All right, so this week we do not have NFP, so next week is NFP. This week on Friday we got a bunch of high impact news, so maybe we would see the market drop in here till Friday, and on Friday we would see a bigger push back into the weekly range. So overall, I'm just bearish on it until this fair value gap is filled. Today, let's look at the cycle today. So obviously find midnight first, and then let's just mark up the range itself. Oops, what happened? Where did it go? All right. So the range is 7, midnight, mark up the high, the low. Now, this particular range is way too narrow. In this case, what I mean by that, it would be really hard to use the standard deviations. I guess you see why. But maybe we would see 4 standard deviations to be filled today and a possible trade opportunity around 4 standard deviations. Maybe we would see a reversal in New York. Let's see. So that would be 4. And it's possible for the market to trade above this high until before we would see the drop into this fair value gap. So that's something that's possible. You know, trade above first the Asian range high, and only after that make a more significant drop into this fair value gap that I showed you right here. So that's also something that's very possible at the moment. Also, from Monday, we still see actually this one standard deviation of Asia range aligning with the fair value gap. So it's a small detail I haven't mentioned yet, but many times when, let's say you would have a standard deviation few days back or several days back that's still aligning with the confluence, that's still valid. So in this case, this particular standard deviation of the initial range was marked up here from Monday, right? So from Monday, I still got this marked up, and now it's aligning with this fair value gap. So I'm still expecting this to be filled. So even though we are on a Wednesday and Tuesday, we are on Wednesday and Tuesday standard deviations were already filled 4 standard deviations here. We still got this one standard deviation as a confluence in this fair value gap. So what I mean by that, even though it's not the same day, it will still be something that's usable in terms of confirmation for this fair value gap. So who knows, maybe this is the exact level that the market will make the reversal at. So obviously this fair value gap area is kind of big. So the best would be, obviously, if someone would like to take a long, would just place the buy for the fair value gap high, but maybe we would see the market trade down all the way until the one standard deviation right there. So also that's very possible. Now I haven't got a clear vision right now on gold, so I do not want to comment on any entries or executing trades at the moment right now. But as a bias, I do have the bias that the market would most likely take out this retail trend line. See that? So this is super clean retail trend line, and as it would take out this retail trend line, we would see the market to trade above this Asia range, and after that maybe a reversal until the fair value gap. So overall, I would hold the bearish bias until this gap is filled, but short term, I would like to see the market to break this retail trend line and also trade above the Asian high to sweep liquidity. So that's something that's possible in terms of bias, but at the moment I wouldn't comment on taking any executions or I wouldn't confirm any execution levels at the moment on gold. Only bias, which is this at the moment. So retail trend line should be taken out. We would see the Asian high taken out and the market to trade down to this fair value gap and possibly complete one standard deviation. So in terms of bias and direction, this is something I'm looking at, or something I would be expecting on gold. If anybody has any questions on this, just please let me know. All right, no questions.
Sorry.
Yes,
Is
go
this
ahead.
what you then call daily cycle reversal, taking out the Asia high?
It's absolutely possible to see the reversal, but I would say it's possible. So who knows? Maybe this would happen because here we swept the low, right? So here we have this low swept by a new low. So even we got liquidity sweep, we are almost. You know what? We pretty much completed 4 standard deviations. So this might be the low of the day, and this might happen too. So maybe I pull back here and then sweep the Asian high, and then also the retail trend line, which is just super clear, the trend line, and after that the drop. So it's also possible, and it's absolutely possible, but at the moment I'm not really executing anything, because it's just a little bit unclear for me in terms of my vision for the market for execution right now on this particular pair. But in terms of buyers, I do clearly see that, you know, we must break the trend line, we must take the Asian high, and we must trade down here. But in terms of a trade that would be executed today, you know, who knows, maybe this would work too. So it's also possible. You know, if you just risk 1%, it's possible 1 to 3, 1 to 4. So the risk reward is good. So maybe you can give it a try. So yes, it's overall, this is a reversal pattern actually in terms of cycle. So if you are talking about cycle, it's actually a reversal. Let's move on to Euro USD, because I have actually a nice markup on that. I would expect continuation here. It's absolutely possible to see a continuation. Higher time frame buyers, so a few words about that. Here actually I have this fair value gap which I expect the market to fill. Then also something on high, much like I believe it was the weekly or the daily time frame. So in terms of higher time frame analysis, okay, that's not it. It was maybe FXCM. Okay, this is it. Maybe it was the daily, right? Yeah, so this is daily time frame. Now it's obviously higher time frame, so it's a long-term bias for several months. But here, something I would like to point out, that this high and this high is super clean equal highs. We will definitely trade above these highs. It's just a matter of time. Also, this is the fair value gap, which is also very high probability for the market to fill in the fair value gap. So it's obviously just a matter of time until we would trade above these equal highs. So let me just also zoom in here so you can see how clean are these. See, these are the equal highs that I'm explaining at the moment. So it's very high probability setup at the moment for the market to trade above these highs and also fill in the fair value gap. That's something I would be expecting as a long-term bias for Euro USD. So today I have actually a daily cycle that's looking like a continuation. So I would expect a continuation for today's cycle. And regarding higher time frame bias, I remain bullish on it. Also, we got market maker buy model, which is original consolidation, low risk sell, reaccumulation, smart money reversal, low risk buy, and distribution. So this model, I will explain much more about this, because for some people I believe it will be confusing, but in a brief context, it's quite simple. We should just see a consolidation here in the market, an impulsive move, the consolidation, impulsive consolidation, and then the manipulation, obviously. See, so this is clear accumulation, the manipulation, this low, see, swap the sell side liquidity, and then we would expect the distribution. So it's classic accumulation, manipulation, distribution market cycle on the higher time frame. And obviously retest trend line is something I would expect that, you know, it would obviously break. It's just a matter of time. So higher time frame, I'm bullish on Euro USD, and today's daily cycle, it's something that would give us a continuation. So it's possible. Obviously, the fib level, low of the day to the high of the day, here we need to fill in the fair value gap in the market, and also the fair value gap can give us a very nice reaction. So a lot of times, if you definitely want to be sure in not missing the trade, you can just place the trade to the fair value gap high. But personally, I believe the best would be 62, and obviously just place the stop loss to the low like that. And we could target as higher time frame this fair value gap. It would obviously take a few days to reach, but what we could do is take a trade, see what today's trade offers us, so see what we got for today, close off partials and hold partial positions until this fair value gap in the market. And also fair value gap is matching with the 40 pips sweep from this high. Also, relative equal highs, liquidity. We got clean equal highs here too, this high and this high. So that's something I would say it's high probability day trade for today. In case we would hit stop loss, I would expect the market to trade down one Asian range standard deviation, which is aligning with this fair value gap in the market. So that's why I placed this position here. It's sort of a re-entry in case we would hold our bullish bias, and also trendline retest support. So this is something that's possible, but overall the past week Euro USD been very choppy, and it's been just chopping around. But let's see what the market offers us for today, and we might see a successful trade. So you just gotta be patient, maybe even just place the limit now and wait. If this hits the stop loss minus 1%, we still got a possible entry at this fair value gap and one standard deviation Asian range. Or maybe if we could see this as 2 standard deviation high of the day, and possibly the market to trade lower. Today we haven't got actually any news events, so we might see the entire day just chopping around and be kind of slow because we haven't got any news. It's also possible that the entire day today would be a very slow day. Maybe we would get triggered here and just barely make any movement to the upside because we haven't got any economical news, at least we haven't got too much fundamental stuff going on in the market that would give fuel to our trades. So now we have to try to rely on the technical analysis. So in case this would be high of the day with the two standard deviations, in case it would be the high of the day and this daily cycle would not continue up higher to fill in these fair value gaps and to take out these equal highs, then we might also see the market to complete this extended modified version of the standard deviation to reach this level 2 and take out this low. But at the moment, I would rather hold my bias for the daily cycle. I rather try to hold my bias and see what we got, and at least try to target 1 to 3. Right there, 1 to 3, or 1 to 4, which is at the equal highs, which is also super high probability to sweep these highs. So again, it's just a matter of time until the market sweeps these highs. So equal highs is high probability. If anybody got any questions, just let me know, because I've seen a couple of guys in my Discord that some of my guys was looking at a bearish setup. So if anybody got any questions, just let me know. All right, so no questions. Let's continue. Yes, I'm doing it right now. Okay, I'm not sure why this zone is just in the middle of nowhere. So let me just adjust this. So it's kind of big point of interest. There. Actually, we might see the market make a nice reversal from this zone. But something to know about Australian dollar USD, that a lot of times the market would react to the round numbers. Like, let's see, take a look at these round numbers I have here with the green horizontal lines. A lot of times, seriously, a lot of times the market reacts to this so well. Here too, it gave a good reaction. Here too. So I will show you what I mean. See, so 72, 000 is round number. The market came here and gave a huge reaction. So I expect a lot of times on Australian dollar USD for the round numbers to be completed a lot of times. So that's something I'm very confident in, because this particular pair is just super sensitive to these round numbers. So if I would mark up this level, which is above this point of interest, it's also possible for the market to trade up to this round number and then make a reversal, because if you do some backtesting for yourself, you will see how these institutional levels, how strong levels these are, especially on Australian dollar USD. So on this particular pair, it's working very consistently. So we might see the market to trade up here. So the reason why I'm pointing this out, because I would use this round number as rather a point of interest in Australian dollar USD. This pair, I'm trading a little bit differently, because it's moving around slightly differently compared to Euro USD or GBP USD, because here we see a huge reaction every single time at these levels. You can take a look at it yourself. And right now, I would actually still hold this point of interest as a possible level for the market to trade down to, for the market to give a short. Now, maybe what would happen, the market would give a reaction here and then move up to this level, because I'm really confident in these round numbers to be filled a lot of times. A lot of times these levels will get filled on Australian dollar USD. And here actually I see the retail trend line. It's absolutely possible for the market to break the retail trend line from this point of interest and trade down here. And maybe we see some reactions here and later move up to this level. So at the moment, what I would expect is the market to break the retail trend line. And aside that, regarding on higher time frame, so let's look at the higher time frame. Aside that, I wouldn't really point out anything on higher time frame aside of this point of interest. So in my mind, I haven't got anything interesting going on. Let's look at the cycle. Maybe we see something today. So, the market is already at 2 standard deviations and we are within this point of interest. So it would be possible for the market to start making the reversal right now. So it's possible. This, in case we would be moving higher, this would be the maximum high of the day. So I wouldn't expect anything higher to be formed today. But right now, as we are in this point of interest, it's a really high probability for the market to trade down from these two standard deviations, and after that take out this retraction line. So that's really it's imaginable. So it's possible. Aside that, I'm not really waiting on anything else. This is not a pair that I trade actually, but if anybody got any ideas on this, just feel free to share it with me. Last week I know I had this call, which was just excellent, but on the daily basis, this is not a pair I trade actually. Yes, that's what I'm doing at the moment. Okay. All right. This might be good. This is the first thing I try to look at. Which direction the market has liquidity left and which direction the market already swept liquidity. So this low, it just obviously this step in the market was super obvious liquidity sweep. It just tapped below and exploded. So it's just super obvious that the market just grabbed the sell stops here and then exploded. Now I see relative equal highs. This high and this high is almost equal high. So I would expect the market to trade about these highs. Let's see if we got anything interesting above these highs. Let's look at the 4-hour. So I'm looking at these above these highs if you got anything interesting there. Maybe even rally above this. It's also possible. Let's just mark up this level as a possible point of interest. And just mark it up, but kind of fade it away because it's not too significant at the moment, but I just mark it up so it's there. So I would say overall I'm bullish regarding where the draw of liquidity is. So I'm expecting this liquidity pool to be filled here, equal highs, these relative equal highs. It's super high probability that the market would run above these. Here we had this low, swept by that low. So I would say I'm bullish on this. Also, right now, what's more recent, the market has this level, which looks good. And I will wait for the market to trade down to this level, filling the imbalance. This imbalance candle must be filled. At least the 50% of this imbalance candle, it has to be filled before the market moving higher. So I would say I expected a pullback in the market until half of this imbalance candle would be filled. So I would definitely expect the market to fill in this imbalance, at least the 50% of it. So at least before moving higher. Yeah, this definitely looks good. So the market now, also created the trend line. It's already breaking. We also might see this in the market as possible accumulation phase in the market. So this might be just the accumulation. We might see a sharp manipulation down to this level. So this point of interest area I just marked up here. And that would look something like this, a strong move down here into this POI. And after that, we would expect the rally. We got shifting market structure. So in my mind, this is super clean bullish buyers. We must sweep these equal highs. And regarding buyers, we must sweep these. Also, just let's quickly look at the Asian range, what we got there. So maybe it would be really nice if two standard deviations would be aligning with this POI. That would be really nice. So that's one. That's two. This is super high probability at the moment. Also, we need to fill in this fair value gap. See, we need to fill this gap in. Let's see what the fib shows us. Maybe also aligning. The goal should be to buy the market at the discounted price. And also just notice that the market, the imbalance 50 that I just marked up previously. So this level, and let me just make this stronger so it's more visible. So the imbalance, 50% of the imbalance level is aligning pretty much perfectly with the 62 level. Also, sort of the one standard deviation area here. See, so as we discussed, the low that they usually, the standard low that there is would be 1 or 2 standard deviations. And it might be possible for the market to complete 1 standard deviation or something around 1.5. And from this area, this level, I would expect the market to trade into the bullish direction. So it's a really high probability, I believe. It's also aligning with the optimal trade entry. So I would say this is something that's high probability at the moment. Let's look at the liquidity sweep. Maybe we also got something there. Take out these sell stops. And if it's aligning with 10 or 20, then that would be very nice. And if it's aligning, if it's of course huge confirmation and huge confluence for us. So let's just see that. Then it's right there. 10 pips sweep from this low, also aligning in this area. So this area overall is just super high probability because a bunch of confluence for the market to trade down here and start trading up from this level all the way do you look for energy breaches? No, at the moment I wouldn't like to take a short because you know, here it offered obviously nice bearish setups, but you know, let's see. Okay, you might be able to take a short actually, to be honest, from this fair value gap. See that? So that's something that might happen. But you know, I'm rather confident in taking the long, to be honest. No, actually, not from the highest high, not from the highest high. So I'm not using from this high to this high because this is the last swing high and this is the last swing low. So I'm not sure if I explained much about that already, but the best is if you pull it from the last swing high to the last swing low. I would only pull it from this high to this low if this would be a whole move. So we wouldn't have 1, 2, 3 highs already. So I would rather prefer pulling it from this high to this low because this is the last swing high. Also, you know, just someone was asking if I would be able to take a short. You know, it's possible because we got this candle here, which is probably an order block right there, and it's possible for the market, as I showed, to fill in this imbalance, fill in these levels that I just showed, fill in all these confluences, and maybe, but only maybe, the market for this fair value gap to react down there. Either. So, you know,